Hey everybody, we're Wall Street Beats Live, and we are live now. Okay, how did that sound? What did that sound?
Fabulous. Fabulous.
Let me see if I can post this. Okay, there we go. We are now posted, officially posted. Good morning, everybody. It is June 9th, 2026. I'm David Maris for Jeff Mackey, Kevin Bakes Baker. We are the core, really the heart of Wall Street Beats. Don't tell the others about that, but without us, our heart doesn't. The heart of Wall Street Beats does not beat. But let's talk about retail. Let's talk about Palantir or something that Kevin had sent over. I don't know what symbol that was. I hadn't seen it before. But Jeff, let's
Oh,
start with what you have. What do you have on the radar? What's hitting your screen today that you want to talk about?
We're kind of getting into something's got to give basically in retail world. It's we've been waiting around for gas prices to tank spending. That just hasn't happened. You can make a bunch of excuses for why that hasn't happened. It's about to happen. Everyone's got credit card debt. The sky is falling. Whatever. But earnings we're kind of in the dregs of the earnings season. We've got Casey's coming up tonight, an absolutely undercovered, widely ignored story that's up, quite a bit this year, 38 odd percent, up 255% over the last 3 years, just doing their business in Ankeny, Iowa, being an awesome general store, kicking ass, taking names. But it's the stocks are not responding that well to earnings, just overall. Victoria's Secret's accepted. And the earnings generally were pretty good. You're seeing nothing unusual. Choosy consumer in the sense that they're going to stores they like, ignoring stores they don't. But for the most part, spending's been strong. And it's easy to kind of I sort of hobnob in places. San Diego is not the ideal spot to look for weak consumers. It's a nice place to shop and people shop. I was in Las Vegas for the hockey game over the weekend. Also a nice place to shop and plenty of consumers there. But the national data is pretty good, and again, American sports came in this morning. They were solid. You're not seeing blowout numbers for the most part, but you're seeing good numbers, and the stocks are just kind of idling around. Some of that is consolidating, like in the case of Walmart, Costco, but a lot of it is just this persistent sort of skepticism that eventually the sky's going to fall based on largely just inflation in general, but in particular the gas prices. Gas prices off over 10%, which is meaningful anyway. We're still 50% higher than we were. But the data overall remains strong, and the stocks seem reasonably priced. Other than that, it's kind of the end of the consumer reporting season, at least the retail reporting season. So we're into the dregs. We got Restoration Hardware, always good for a laugh and a kind of hallucinogenic conference call coming later this week. I think expectations are really low though, and I think the risk for most of these stocks is to the upside. I frankly haven't heard a call as bad as Lululemon's in a long time. Super lost company. The stock is not any great shakes, but I mean that was
wow.
the kind of it just is it out. Isn't that dark just terrible looking? But
Well,
it thought it'd be
we
down
talked about it
20%.
last week. Things are so bad. Well, they just got worse, and it was almost impossible to envision that.
Yep, yeah. The E keeps going down, and so that is the definition of a value trap. It's boy, the PE so low. Not when you just
Oh,
keep taking the E lower. That's the way math works. It's
mm.
arithmetic. It's not really a higher math level. So if you keep taking earnings down, but as we talked about last week, and as we've mentioned multiple times, hiring a CEO who people weren't that crazy about in the first place, and she can't start until September, not expressing the sense of urgency that investors would like to see. And so that's going to take a while to turn. Now, do I think it does turn? Yeah, probably. But like a lot of troubled companies, and these guys are suddenly a troubled company, which is weird coming from the place of strength. It's they acknowledge themselves. The athleisure market is actually pretty good. One thing the call stood out for was candor. It's they're screwed and they know it, which is better than denial, I guess. But you're still screwed. And that's where they are. But for the most part, you're seeing really solid execution. The good players are winning, and the consumer keeps showing up. So, we don't really need to weep for the economy just yet. I weep a little bit for these stocks that are generally underperforming, but it's the classic stock pickers market. And I think we'll see after, if according to Hoyle, what you see in this group over the course of the summer is kind of a slowdown, people getting ready and arguing over back to school, and then of course the holidays start. Christmas, naturally, in my opinion, starts right around Labor Day. And so, we'll figure looking for kind of an August bottom in these names. But for the most part, it's steady as she goes. We're just not getting the implosion that people expected.
Yeah, I mean, you look at the chart and then you pull up like today, it's up 2 or 3%. And I know a lot of investors sometimes get fooled when they look at this and they go, it's a bottom, right? It's clearly a bottom because it's at a 52-week low or near it, and then all of a sudden it turns. And everyone wants to be the one who calls the V that picks the bottom. But you would have done that $10 ago, $20 ago.
Right. It's just bad manners to pick bottoms. Don't do that. There are better. Look at Casey's. CASY, their bakes. If you're doing your charting stuff, that's a good looking chart. It's
very sexy
out there scrapping around for these bottoms. It's Casey's. But Casey's a great Eddie Freddy performer. It's so much easier to pick names that are actually just out there chopping wood than it is to pick a name like Lulu that really they don't have a story. They don't have a turnaround plan. And it's disheartening, David, because these are the companies that people ask me about. Hey, when's Lulu going to turn? Hey, what's up with Nike? Great American Blue Chip, that's got a bottom soon. And it's like, no, it really doesn't. Think about being a now $40 billion American institution, is that gives you $40 billion to lose. And they're kind of doing their best to disintegrate. They're having problems at the high end, but it's really dragging down again that lack of persistent optimism. If you're a higher multiple retailer, it's super hard to gain any traction whatsoever. I'm talking about like the On Holdings of the world, even Deck, which is not a super high multiple, but there's not really evidence that Hoka's slowing down. Nike's just sort of dragging things down in the mid-levels shoes, and it's an issue. So, I would be reluctant to chase any turnarounds here, reluctant, frankly, to chase a lot of the rallies. But at the same time, that doesn't make it a great short. Lulu's bouncing. RH, which we just mentioned before, they had a hilariously soft core. They actually came out with an earnings video instead of a news release, in which they quoted Einstein and had kind of chimes, and it sort of sounded like an expensive massage type of situation where they talked about the RH brand. It was just a comically strange and terrible call, but that stock's higher than where it gapped lower and then just immediately filled the gap. And to your point, David, it's like, oh boy, this must be the bottom. I think this stock probably reacts well and then just starts drifting lower again when they report on Thursday.
So, okay, well, we'll keep an eye on that.
And my point on that, just to make one last point, if you look at the spending data that we saw today from both NRF and Bank of America, the NRF stuff confirms kind of that people are still spending. That was the data I was alluding to before. So just to be specific about it, but they do a pretty comprehensive. People are actually spending discretionary. The only things that weren't up were just housing, basically. It's just home improvement stuff and your Home Depot Lowe's category, but everything else was higher, including the most discretionary of stuff. Just apparel was higher. People are spending. They're not going to restaurants, but they're going to the mall.
Yeah, I just pulled up the Casey. That's a company I'm just not familiar with. You may have spoken about it before. I missed it, but that's the kind of thing that I just I love looking into, because I've never been to a Casey's general store. What does that chart say, Kevin? Because I look at it and I go, well, it's pulled back a little bit. It's a 43 times earnings company. Seems expensive, but maybe it'll grow into it.
It's goading Wawa to go public is what it's doing, and I can't wait for that. Which is Wawa is a national treasure in my opinion. These are stairs. I mean, stair here 474, 531, 572, and reacting to earnings the way the good Lord intended. So yeah, it got a little bit, pricey here at 901 and a pullback. That volume is a little bit concerning, but earnings are today and we'll see what happens. I mean, this might be the one that trips them up, but they're pretty consistent over the last 18 months.
And Jeff, you like Casey's?
And I think
it's a
that's
solid brand.
that performance. I like this kind of fills in the puzzle pieces. The Dollar General, Dollar Tree, both reported decent numbers. They had great reactions, and that got them to nuttin' honey year to date. Casey's is just a story. I was kind of teasing people on the Twitter box yesterday for chasing Apple, which is the most covered stock in the history of the world. Everyone's literally watching a product release on live TV. You're not going to add alpha there. It's go out to the Iowan General Store, and that's where it turns out no one's looking at these companies. Cracker Barrel reports. Cracker Barrel hasn't recovered from the remodel they did that was so controversial, and it turns out all the controversy was created by hedge funds who are short. Like, no one gave a crap about the Uncle Remus mascot. It was just kind of a boring type of remodel, and the stock just got murdered. But that's a decent look at kind of, it's the consumer again that people just like to ignore. No one's going out to Ankeny, Iowa. I'm the only fancy finance guy that I see roaming around Walmart, for that matter. I mean, it's people don't like to go to these stores, so they just kind of look at the credit card data and then just move on. I would encourage them to pay a little bit of attention, because you get sometimes your best look and your most candid calls from these retailers people have forgotten about.
One that some people have forgotten about, that's kind of up your alley, that I've owned on and off have owned. I've talked about it before, but is Yeti, and they seem to be in a good product cycle lately, and the stocks come back a bit. I don't know if you have an opinion of it, or Kevin, if you have an opinion of it. I know somebody who came out with kind of a short report type thing about how they were in trouble, and that caused me to kind of buy some more. Turned out to be kind of the bottom. They've just introduced. They're doing exactly what I thought they should do, which is Yeti's such a strong brand. Put it on everything. Sell jeans that are called Yeti jeans. People will be like, "Oh, they're super sturdy. They're over engineered," and so that's what they're starting to do with like pots and pans and different colorways, everything that to get everyone who collects Yeti stuff to buy more of it, and then people who don't know it to buy cast iron pans with Yeti on it.
I mean, I would love to bet against Yeti. That looks like a cup waiting for a handle there to be on a chart.
Mr. O'Neill, thank you for joining us. The ghost of Bill O'Neill.
Hey man,
I love it.
Your mileage may vary on the chart, but they're trying to make the leap, to David's point, from just being what amounts to a thermos company. They don't call them that, but that's what it is. To an everything company. I don't think they should have stores. I don't think they're gonna make the leap in a lot of ways, but people love to bet against them, and they love to bet against Victoria's Secrets too, and that didn't work out well. Well, it worked out well for me, but it didn't work out well for the shorts. I think again, this is a time where people are just taking these negative consumer theses and really running with them. It's making the for the most part, you got your 11% drop on Lulu, richly deserved. Probably would have been a 20% in a more even-handed market, just because it was such a hopeless call. But I'm not shooting against Yeti here. I've taken mild shots against them in the past, just because it is so hard to extend your brand that far. But they seem to be kind of pulling it off with a reasonable level of aplomb. You can look at On Holdings as well. I mean, that was a tremendous quarter out of them. I'm no longer involved with the stock. And it's just kind of hard for the stock to get out of its own way. As you can see, that doesn't look like a stock that has reported nothing but wins. It's kind of a shame for them, because they're in that sweet spot for growing brands where they are full priced, selling out kind of without doing any discounts whatsoever. That never lasts forever. Normally you see a little more bang for the buck as an equity holder when that type of thing's going on. But again, the headwinds this year are just too much, between the lingering impact of tariffs and the price of gas is just, it's, if guys like us are kind of noticing when you fill up, it takes a lot for me to really pay that much attention. Gas is just the weather. Why sit around and bitch about it? You're cost whatever it costs to fill your tank. But it's what's changed over the last few months. It's like, holy crap. I mean, it's about $150 to fill my freaking, that seems like a lot. People naturally spend less, but that's kind of not what's happening. I'm not sure. Maybe it's the AI stocks. Maybe everyone's just long and they're willing to buy gas on margin.
No, I think you're right. I mean, you're seeing it. I had the same view. Is once it gets to you're like $80, $100 plus for a tank of gas, you're like, and so yeah, we might be fortunate enough where it's not changing our behavior of things that we're buying directly, but indirectly, you're definitely having a thought of, wow, this is tough. I should not do something else. I mean, I feel bad with on holdings being down. I mean, I don't know what Roger Federer is going to do, really. I mean, he's in
I know,
retirement.
it's going to be hard for him to find €2 to rub together. The poor guy.
Oh my heavens!
It's a shame. We weep for Roger, but and we're also guys that sit at a desk all day. But if you're someone who travels and drives for a living, which a lot of folks are, if they have a long commute, I mean, you notice that adds up. And as a nation, for all the EVs and everything else, we still fill our tanks about every 9 days on average. So you would expect that to kind of crimp spending a little bit, but it really hasn't. And again, I'm more of a directional guy than I am. You did see the consumer space take a little bit of a whack that it's recovered somewhat from when that line was going upward to the right on gas prices, but now it's kind of mellowing out. For all the weird rhetoric and the fact that we've announced truces about every 20 minutes for the last month and a half, that never really came to pass. The price of oil it seems to be kind of coming back a little bit, and so the guys in the pits tend to have a pretty level-headed view, at least relative to the hype. They're not buying the headlines; they're paying attention to what the flows are, and so that would actually be an incredible boon to have the price of gas be coming down straight into the holidays again, starting in Labor Day, as is the national tradition of Christmas. That would be great. So we'll see what happens.
All right. Well, so let's move on a little bit to Kevin. What do you have for us? And also, I mean, Bitcoin 61,000. It wasn't that long ago that a few of us were on the show saying, Bitcoin, we don't get it. We don't own it. We wouldn't own it.
Did they split? Was that a Bitcoin split? Did I miss that?
Yeah.
What do you have for us, Kevin?
Yeah, this is my short that I put on the other day. So this is inverse Bitcoin, and it does it through the futures market. It isn't exact, but I'm hearing around 25, 26, and it clearly took that out. And this is, I don't have the Bitcoin chart per se, but here's the granddaddy of Bitcoin ETFs, and they had something like 13 straight days of redemptions, all the Bitcoin ETFs, and they had a bounce yesterday, but on feeble volume, which is exactly what I want to see. Bitcoin resistance is now 64,000, give or take. I'm listening to podcasts where people are saying, well, it's at the 200-week moving average. That's 4 years, guys. 200-week moving average. And this is a buying opportunity. The RSI is at its low. That's a buying opportunity. And I'm not hearing it's a store of value. It's a gold surrogate. I'm not hearing any of that stuff. And so if I'm a broker and I said, okay, I want to get into it, let me go to, I don't have it, but if I'm a broker and I said, what's that? Let's take 5% of our portfolio and put it into Bitcoin, the BlackRock Bitcoin Trust, you're having a tough conversation right now. You're down 50% in a short period of time. And so I just got to people say, get this thing off my screen, get it off my statements. I don't want to talk to Mr. Mackey in San Diego about why I'm losing him so much money in 5% of his portfolio that was supposed to be going to the moon. So I think I'm right. 59,000 now on Bitcoin itself is the level I'm looking at, and I think. And I'm knocking on wood right now. I think we're going to have a big whooshing sound when people say, wait a minute, this RSI isn't working. The 200-week moving average isn't working. All the narratives we had are exhausted, and just hit the bid and get me out. And that puts pressure on Saylor at MicroStrategy even more. And he's got to try and get his disciples to buy while he's selling. And so I think it's a tough place to be. I sold platinum. That's my symbol before, not Palantir. Platinum. Platinum's rolling over. Okay, so that's PLTM. And this is my theme for today. Is I was in here around 10, 11 or so about a year ago. Peeled it back when it got to be 10% plus of the portfolio. Sold half when it became a double, and then I just shot the rest of it here for about a 60% gain. And I will do this all day long. I mean, that to me is, I'm getting teary eyed just thinking about it. I did the same thing with silver. I've been bullish on silver for a long, long time. Bought it back here in June. Did the same thing. Peeled off when it became 15% of the portfolio. Cut it back to 10. When it doubled, I sold half, and then the rest of it has gone here. And frankly, the precious metals aren't that precious anymore. If we had to have a title for the show, the gold, silver, platinum look like this, taking out the 200 day on big volume. And it could be a head fake, but I really, really doubt it. So I've been consistent. I follow my discipline, and so I'm and my last metal that I'm out of, I was the metal portfolio for a while. Here I kind of made 5% or so, buying it right around here. This is uranium, URNJ, the Sprott Junior Uranium Miners, and it just isn't working. The uranium price is around 86, and it's not going down, but it's not going up. I think the long-term uranium story is unbelievable, but I'm not going to argue with this chart. And so I'll come back to this at some point. I'm almost certain, because I think demand from China and India alone are worth it for the uranium story. But for right now, I'm out. I'm 22% in cash. I've got 8 ETFs, and I'm hunting around for 2 more, and stay tuned for those. Sorry for the ramble and the rant, but that's what I have.
Not at all. So maybe Bitcoin's dropping because everybody has to shore up their P&L for SpaceX. Like if you're going to,
it's being talked about, and I heard it the first time. I said that seems like a stretch, but the numbers are so massive, and the probably the same audience that believes in extraterrestrial data centers believed in Bitcoin, and they say, I'm going to go with Elon. And
I just put it in
Bitcoin.
the group. I just put it in the group of like if you're speculating in a number of things, and you just take some of your speculation money from Bitcoin casino bet to SpaceX bet. Fidelity is now allowing retail investors with $2,000 to invest, so they kind of lowered what they usually do. But you can't, if you sell it within the first, I think, 15 days, you get a ban for 6 months for any IPOs, and if you do it 2 or 3 times, you're banned for life via Fidelity. So interesting. I haven't seen that before. But
here's a wrinkle too.
I mean, history rhymes. We're seeing the exact same kind of the buzz and the zeitgeist, if you will, over Bitcoin that you see in every sell-off of any sort, and we'll see in the AI stocks eventually. But the narrative is just kind of shifted over to these things are going up forever. Hodl, we're gonna have diamond hands. We're never gonna sell. And now to Kevin's point, it's we're down to, it's back to the 50-day, and screw you, I've owned it for 50 years, and if I would have listened to all this negative thinking, I would have never made my fortune in Bitcoin, and people just ride it into the dirt. And so we've just kind of moved our fancy onto the AI stocks, where it's of course Micron will go up forever because it always does, and those of us with gray beards and bald heads have seen Micron try to grow up forever before, and they just took out the highs from 2000 in the case of Intel and Micron both. So that's telling, but no one wants to hear it because we're just old guys, and what do we know?
I was just going to say, there probably aren't that many investors that remember investors fighting for allocations for AskJeeves.com.
Yep.
or count yourself lucky if you don't get that allocation. So
I mean, those were much different stories. Like the pricing was crazy, and the pricing was really the advertising at the time. But you could make a lot of money flipping IPOs back in the day. But that was because the IPOs themselves, if you're an Ask Jeeves which Netscape kind of proved. They left some money on the table, but that was great publicity because that's all people talked about when they went public was just look at these pops. These are crazy. And what they really wanted are eyeballs because that's how their valuation was measured was the eyeballs. And so, it's what the hell's Ask Jeeves. The stock just quintupled. That generated a lot of eyeballs, made for a really good first quarter, and the stocks were off to the races for a time. And then that time ended.
Nick Colas was on the Compound and Friend with Josh Brown. Yeah, you're Josh Brown, co-author Josh Brown, Jeff.
Indeed.
And he said that, and I forgot, I didn't realize this. The average IPO pop was 71% in '99. Don't quote me on that, but I'm almost positive that's the number. And and I've got an adage that if I can get an IPO, I don't want it because that means Fidelity and T. Rowe and Wellington and everybody else has passed it over. So, I think the SpaceX is going to be. I've got 2 bags of popcorn for that one. That's
but I will say the one difference is they've allocated so much to retail. So before all the others were, we will only allocate it to retail if we can't get the demand. Here, they're forcing that. It's still. They may only be forcing it because they know they don't have the demand institutionally, but I don't think that's the case. But we'll see. I agree with you. I'm fascinated to see what happens. I'm not participating in it, so we'll leave it at that.
But it'll be good theater. It'll be it's. I don't think it tanks the whole market. I think it just will be kind of a one-off. And I think for more prudent types, again, depending on your time frame, if you have forever to make the money back, knock yourselves out, go with God, and chase it all you want. I plan to not work for the rest of however many years I have left, so it's going to be, I don't want to take my time to make the money back because I'm chasing SpaceX. That said, I wouldn't bet against Elon ever in anything because forces beyond my control are involved in all of it. So
I agree. I mean, when you look at the numbers, that's the part where I actually haven't seen someone say this, coherently, which is if you look at the numbers, the thing is growing like a weed in lots of different areas, and it's the areas that they're in are really fast changing areas. So I've seen people say it's completely overvalued. I've seen people say that no, you just have to own it because of him and where it could be. I think there's a middle ground, which is, like you said, you don't bet against somebody who's just clearly a winner in so many domains. And the domains that he's taking public are things that he's doing well in. So,
and the kind of things you don't want to short. I mean, I used Starlink over the weekend when I was flying to Vegas for a hockey game. It's just a better internet. It's just incredible. And it's amazing that every single airline isn't using it already. So we replaced NASA. He's going to replace high-speed internet with using satellites, and he made things that can catch rocket ships as they land, kind of like Godzilla with their little clamps. Just cool stuff. That's really relatable. And again, you can go nice ways with just a really nice narrative, and the fact that you managed to build a company that's replacing what NASA and Boeing did for decades. I mean, that's not without it. It's kind of impressive. It's not bad.
Think of without not having Verizon, just having Starlink for your phone, or instead of AT&T, and it's cheaper and faster.
And if you've ever flown with it, honestly, like airlines, all those videos of people fighting on airlines, they'd be docile as cows if you just gave them high-speed internet that's actually faster than their home. People would just sit there through any delay, just because they do. They just sit there on their TikTok, and they wouldn't have to pay for their Wi-Fi, and they'd be happy as clams for whatever. It would cure a lot of what ails the flying experience.
I had it
it's
on
a good product, I guess is what
United. I had it on a United flight this weekend as well, and it was fantastic. So it's
awesome.
game-changing, fantastic. Like that entire process of trying to get Wi-Fi on a plane that doesn't work, and you pay $12 and you load your credit card, and the connection's so slow you can barely do that. That all goes away with Star. It's just better, and that's cool. And so again, it's not the kind of thing you can admire the company without betting your 401k on it.
Yeah, it's like going to a museum. You can enjoy looking at it. You don't have to take it down off the wall. So
good point.
Hey, everybody. Well, we are at the end. Go to wallstreetbeats.com to hear more from our experts and from us too. We will see you later in the week. I'm David Maris for Jeff Mackey, Kevin Bakes Baker. Have a great week.
Thanks all. Thank you, Jen.